it is a newspaper, or you can see in the news which is coming in daily here. And today also there was a lot of news in the newspaper here about the US tariff, how it is going to be, how it is going to be a good, or it will be a problem, it will be a turbulence, or it will be an opportunity for every country, whether it in India or anywhere in the world here. And there are a lot of speculation is going on in the market that the tariff is going high or tariff is going low here. For this purpose here, we have a very good panel of best panel of, for the purpose of discussion here. And we will start with the presentation of, with the speech of Lakshmi Kumaran sir here. Before we start with Lakshmi Kumaran sir, I would like to invite our president of the Chamber of Tax Consultant, Vijay Bhatt sir, for the purpose of introduction of the Chamber of Tax Consultant, say the few words about our program. Sir. Vijay Bhatt sir.
Thank you, Prakashji. A very warm in this summer. Good evening to everyone. Good morning to Mr. Andrew, and welcome to all the attendees today here in this unique session organized by our Delhi chapter on the topic US tariff and turbulence. And I must compliment Delhi team headed by Prakash Sinha ji and all the teammates Harpreet ji, Richa ji, and Saurav ji, Smita ji, rest of the teammates, and of course our all esteemed learned speaker today, Shri Lakshmi Kumaran ji. Welcome to you, sir.
Thank you.
Gautam ji, Devinder ji, Mr. Andrew, and later to join Mr. Uthuke. All of you are here today for this wonderful session, and I suppose, to the best of my knowledge, I think we are the perhaps the first one to hold this particular topic for the benefit of our members. And for the benefit of the members, let me update you all, those who are non-members today, about the Chamber of Tax Consultants. Formed in 1926, we are a non-profit educational institution for the purpose of spreading education in the field of taxation, whether direct tax, indirect tax, international tax. It's a Mumbai-based association having Delhi chapter. What you are all today in Delhi chapter, a very much essential and crucial part of the Chamber of Tax Consultants. And I've been always telling it's always a pleasure meeting all Delhi mates, because Delhi is always coming out with something or the other new topics with led by Prakashji and his team. And today, of course, as we move further, we were formed in 1926. In July, we are going to have our centenary year. We are completing 100 years, and in that next year, that is 100th year, we are going to have lot many educational programs coming up in the form of various seminars, webinars, residential refresher courses out of Mumbai. We have our Pune, Delhi, and Bangalore study circles also. We have students' activities going on in the form of moot court, essay competitions, and so on and so forth. Uh, Friends, I'm also happy to announce that our monthly magazine journal, Chamber Journal, has completed 50 years. First publication came in 1975, and this is our 50 years completion. And tomorrow in Mumbai, we are going to have a celebration function to mark this event of 50 years of the Chamber of Tax Consultants Journal. And I'm glad that Chamber, along with everyone's support, like today's learned speakers, have added value to our this Chamber session. Thankful to you all, and looking forward for this wonderful session from all the learned speaker on the topic. Happy learning and happy evening to everyone. Over to you, Prakashji, once again.
Thank you, sir. Today, our first speaker is Lakshmi Kumaran sir. Uh, Lakshmi Kumaran sir is well known in India here and across the world here. He does not need any introduction here, but it is my duty to read his brief profile here. He is the founder of and managing partner of Lakshmi Kumaran and Sridharan. With nearly 4 decades of experience, he is specialized in the taxation, international trade, corporate law, and litigation. He advises the client across forums in India and internationally, and currently serves as a legal advisor to the Ministry of Commerce. In 2023, he was appointed as the Distinguished Fellow of Niti Aayog here. I am very much thankful to Lakshmi Kumar sir because the moment we discussed this program, he just sent a small message to him, and he very gracefully agreed to be a speaker on this part here. I'm really thankful to Lakshmi Kumar sir for accepting our invitation for this program here. Now I will this one I will request Lakshmi Kumar sir to take the charge of this one here and deliver his speech here.
Meanwhile, Mr. Othuke seems to have also joined. Welcome to Mr. Othuke.
Great.
Thank you, Andrew, and also Vasuke, co-speakers. Welcome.
Thank you very much.
Thank you. Very good. This is Lakshmi Kumaram. Devender is already online. Devender, can you
Sir, I'm online. Yes, sir.
Can you share the screen? Yeah.
Sure,
Can you
sir.
share the screen?
I'll do that, sir.
While he is sharing the screen, I just wanted to tell you that I'm midst of a big trial going on in a city called Bangalore. And I told that I will be busy, therefore I will spend about half an hour to 35 minutes or so, and then after I will leave. My colleagues will continue to be there. Any questions, etc., they will always answer them. We shall come to the subject matter directly. We are talking about the US tariff and turbulence. That's the subject which is given to me. That's an interesting topic. Next. What I intend to cover today, we will talk about the US trade with other countries. And what do we mean by America First investment policy? What are all the trade legislations used by the US, especially Section 232, 301, and what we call as reciprocal tariff? And what exactly is the actions taken by Mr. Trump in his first term called 1.0 and the action taken by him in 2.0? And what is the way forward? Now, I could cover the subject matter all over the world, what is going to impact. But since we have got other two wonderful speakers to talk about what is going to be in the US and also in Africa, I thought I shall confine myself what impact it is going to make as far as India is concerned. That's what I introduced this time. Yes. As far as the US trade relations with other countries are concerned, which Mr. Trump has also been mentioning, if you look at the exports from countries like China, European Union, and Canada, all these you will see the numbers is export from US is less, import into US is more. Therefore, there is always a trade deficit, which Mr. Trump feels that this trade deficit is acting against the interest of the United States. The employment opportunities are less, and more of trade deficit is ultimately going to cause immense harm to the US economy. And therefore, he feels that there is need to bring what is known as the balance. In other words, he wants the trading countries to import more than what they're importing now and bring the trade balance to zero. That is what he says reciprocal. Namely, you import this tariff, I import the same. So overall, he would like to have the trade deficit reduced to zero with each of those countries, and for which he feels that he imposes a customs tariff for each country depending upon the trade deficit in that particular country, he feels that the countries will come and he will get the market access to other countries, and thereby the trade deficit will come down and US economy will go up. That's the fundamental principle under which he is operating. Please don't ask me whether his assumptions are right, whether what implication it is going to have within the United States, outside the US, whether his assumptions are correct and his predictions are correct. What is likely to happen to the economy in the US and elsewhere is a bigger question. All the economists are working endlessly, sleeplessly, and that question is still a question mark. The second question which I wanted to address is, whatever actions he has taken till now to impose various tariffs, I'm going to indicate to you under which act, what duty he has been imposing, etc. I'm going to do that. But I would say one thing, whatever actions taken by him or by US today, I should not say about a particular person, but the US now, if you are comparing and seeing whether these things are WTO compatible, answer is clear, no, according to me. But I mean, the very first thing of the WTO is what is known as the most favored nation treatment. Whatever is the taxes or the duties that are being imposed on the import of a particular country must apply to the same rate to all countries importing into US. That is the principle of MFN, and he has given a thorough go-by for this. So therefore, we are going to have a problem. If it is going to be complained in the WTO, US is most likely to lose. However, since the WTO itself is paralyzed, since the appellate body is not functioning, so therefore there is no likelihood of any action being brought in the WTO and getting a decision on this. So therefore, probably he has weakened the WTO, and thereby the dispute settlement and the appellate body decisions are no longer applicable, and therefore he has a field day. Now, what is this America First trade policy? What does it mean? First of all, I'm now talking about the various government documents which have been published from the US. First of all, focus on American economy, the American worker, and the national security. That is the first. Promote investment and manufacturing in the US, particularly in the high-tech areas. Address the unfair and unbalanced trade balances with the major trade partners, calling it as a security risk. That is, according to him, if the trade balance is negative in favor of US, it is a security risk. Also, he's talking about renegotiate the existing trade agreements, including United States, Mexico, Canada, America. USMCA also you want to renegotiate. And then he's also talking about countries where there is a foreign currency manipulated. And these manipulations ultimately result in the weakening of the trade and thereby weakening the US economy. He wants to take action against those countries. And he will also identify countries to negotiate trade agreements to increase US market access. Here, what I feel what he's likely to do or he's trying to do already is identify the country with enormous amount of demand. Consumption demand, whichever country is highest or high, he would like to see that the American goods get a market access in those countries. India is one of them. India is probably one of the largest. Now, same also China, Europe. These are all big countries where the market access is big, demand is big, and US would like to ensure that their goods are exported more and more to these countries. He also wants to strengthen the anti-dumping and subsidy investigations. He is talking about transnational subsidies, that is, the subsidies one particular country may give to industries in that particular country. But when an action is taken against that particular country, the investor in China, for example, China, he may go and invest in another country, an African country, and then start manufacturing, exporting. If that particular investment also has an indirect subsidy from the Chinese government, he wants to take action against them. Similarly, cost adjustment, zeroing, all those things he would like to strengthen the anti-dumping actions. And wherever countries are charging, levying discriminatory taxes, like digital taxes, etc., which will ultimately reduce the total tax revenues on the United States. And the United States companies like Google, etc., if they are going to be taxed in the sourcing country, then he would like to take action against them. And ultimately, he also wants specifically to review Chinese unfair trade practices, including IPR practices, and accordingly impose tariffs. This is broadly the America first trade policy trade. Next. Now, under what sections of which act he is imposing these tariffs? The first section, I would say, because all of us by reading only the newspapers, what we get to know only about the newspapers, I am now talking the legal provisions, in what way the duties are being imposed. That's what I'm going to do now. Section 232 of the Trade Expansion Act is 1962, is one act here. Under this, he is imposing, under this, what we can do, if certain imports threaten the national security of the United States, then it gives the power to the president to bypass the Congress and modify, adjust the import tariff quotas, etc. Investigation by the Department of Commerce and the report by the Secretary of Commerce to the president is necessary. This is the condition necessary. When was it last imposed? The last imposed tariffs on other trade restrictions 3 decades before 1986. But after Mr. Trump came to power in the previous term, I call it as the Trump 1.0, he opened 8 investigations and he put tariff on 2 steel and aluminum, and other investigations, auto parts, etc., were also concluded. But no action was taken then. That is one. Second, Section 301 of the Trade Act, 1974. Under this, consultation by US trade representatives with the targeted governments will be taking place. If the determination is affirmative and that it does actions, it will now recommend to authorize the president to impose duties or other import restrictions and actions. US trade investigation and action to enforce US rights under the trade agreements and respond to certain foreign unfair trade practices. This is 301. This section is being used significantly by US. See, in 1995 WTO, US used it to build cases and pursue dispute settlements under WTO. But under Trump 1, we could see a very major shift in the policy. First of all, in 2018, we brought in the China IP violations. In 2019, Europe and UK subsidies in the large civil aircraft cases. 2019, he talked about France digital taxes. Foreign digital taxes in several countries, have been, including India, was also targeted 2020. Vietnam currency evaluation manipulation was also considered. Next. There is another act called International Emergency Economic Powers Act, 1977, called EBA, we can call it. Under this, what the president can do, if he can say, and there is a finding, there is unusual and extraordinary threat, which has its source in substantial part outside the United States, and it can cause serious problems to the national security of the United States or their foreign policy and the economy of the United States, then president can impose or they can empower the president to take action. There are some exceptions and checks. I'm not getting into that. We also have to have the report to be submitted to the Congress for all those actions. And Trump 2.0, that is the recent one after January 20th, he has used this particular section liberally and he has imposed tariffs on China, Mexico, Canada for a failure to check fentanyl trade. I mean, I do not know whether that could be used as a major thing for imposition of heavy tariffs. So we also see Section 201 of the Trade Act 1974. This also gives you what is known as a temporary safeguard measures to import surges. US International Trade Commission investigations are taking place. Import surge causing serious injuries are being considered. President action can be 201. Anti-dumping actions and all those things are also coming under this category. Now, next. What has happened? Under Section 301, varying tariffs have been imposed, varying from 7.5 to 25% on goods of China. This actually had 4 lists. List 1, List 2, List 3, List 4. List 1 consisted of 34 billion trade. List 2 consisted of 16 billion trade. List 3 about 200 billion. And List 4 about 300 billion. The duty rates varied from 7.5 to 25%. These duties are applicable even today. Next. Under EPA, separate duties have been imposed on the import from China. Let us now look at it carefully. On February 4th, 10% tariff on goods of China was imposed. On March 12th, it was increased 20%. And what is the reason? National emergency public health crisis due to flow of fentanyl. He created a separate entry called Chapter 9903.01.20 under the customs tariff, because Chapter 99 is an optional tariff. Up to 97 is compulsory, 98, 99 are optional. And he has also said there will be no drawback. In other words, if Chinese goods falling under any of those tariffs are coming into US, and if US imposes 20% duty over and above the normal MFN duty, and using that, if the finished goods are manufactured in the United States and they're exported, normally all the import duties are given as a drawback. But in this particular case, it is very clearly stated that there will be no drawback of this duty. In other words, the US exporters have to bear this at their cost. In other words, it is a very clear message to the US manufacturers: if you are going to import goods from China, beware, the duty not only be higher, if you are trying to use it to manufacture export goods, you will still not get the drawback of this amount. This is in addition to the existing duty, charge, the anti-dumping duty, CVD, etc. What is the coverage here? Coverage is for all goods, very limited exceptions. And Chapter 98 goods are exempted because for the government purposes. And very, very small exemption have been given for the very value of repairs, alterations, etc. I think it will be very inconsequential to tell you about this. Therefore, this duty is existing as of today, as we are speaking now. In addition to that, you will now find Section 232 duties have been imposed on steel and aluminum. All previous exemptions, because this duty was imposed when earlier Trump 1.0, and there are all exceptions have been created. So the US manufacturers, when they go and tell them, hey, this particular product not being manufactured in India, in the United States, why are you imposing a duty of 232 duties? And the exceptions were given. Now under 2.0, Mr. Trump has completely withdrawn all those exemptions. On March 12, he actually imposed the duty on the derivatives. Originally, duties all on steel and aluminum. Now derivatives are also covered. What do you mean by derivatives? For example, if a product, say for steel or aluminum, is covered under this, chapter 73 or 74 are covered under this. Now, if a product is manufactured, say, of wires and cables, aluminum wires and cables, it predominantly consists of aluminum, but the tariff item is somewhere else. So therefore, United States now identifies those products which are called derivatives, which contain predominantly the steel and aluminum, but they are not falling on the respective tariff items. They fall on different tariff items. Even though they are falling on different tariff items, this duty is being imposed. This is the first time we are saying the derivatives are being covered. And now here the definition of derivative is being expanded. Up to this point is fine. On April 4th, he imposed duty on beer, on anti-aluminum cans, and they are beer and aluminum cans have been added to the derivative list. That is, aluminum is used for making cans, therefore predominantly made of aluminum. Therefore, aluminum duty is imposed. Therefore, you must impose duty on the cans also. So therefore, if you look at the coverages, it is steel, aluminum, and derivatives. Exemption to derivative aluminum is melted in cast in the United States. What does it mean? If an exporter from China was exporting products or derivatives, say of aluminum, he will have to pay this duty. However, if he says, I am using the aluminum which was produced in US and a smelter, if that aluminum is used as a raw material and produce the finished goods and supply back into the United States, that will get the exemption. Similarly, in the case of steel, melting and pouring must take place in the United States. Mere drawing or plating, etc., all those rolling, etc., will not apply. The steel must be produced and melted in the United States. That steel, if it is used in the production of derivatives from United States, from China, they'll get the exemption. So all these things make it very clear that the goods of United States must be used, and goods of China are not to be used. It's discouraged. That's a clear message here. This is only part of the story. Next. Now, parallelly, there have been investigations under 232 for auto and auto parts. That now in Trump 2.0, on April 3rd, he has imposed 25% duty on all automobiles. Mexico, Canada, they qualified automobiles. Duty on approved non-US content of each model was taxed. Other countries' automobile, no exemption. Full 25%. That is valid today also. US content would mean the value of the automobile attributable to the parts wholly are obtained or produced entirely and substantially transformed into the United States. I am not going to leave it because a lot of case laws in the subject. There are lots of judgments in United States courts. What exactly substantial transformation is a subject by itself. Mr. Sinha, I don't think I can cover it today's discussion, but it is very important to all of you to know. And on May 3rd, a 25% duty has been imposed on automobile parts. Again, Mexico and Canada, they qualified parts, etc. Now, there are additional parts to be covered within 90 days. That is the direct he has already given. Here again, there is no drawback. If you are going to import component from outside, which is suffering 25% duty, if you manufacture the car and export, no drawback. This is the position as far as the automobiles and automobile components are concerned. Next. Next. Next, please. Now, coming to China again. As far as the US is concerned, even India, if there is a import of goods into the United States of low value, called de minimis value. If a product is costing less than $800, then there is no purpose of levying the duty on it because it is a very cumbersome. So therefore, if you look at the e-commerce, Alibaba, Amazon, etc., when the goods of Chinese origin, an importer a person in US can click and order. When he orders, if the goods are coming into United States from China, and if the value is less than $800, they used to get the exemption because it is de minimis. Now, there have been reports saying that there was gross undervaluation. The $2,000 material also is declared as $800 and then imported. But whatever it is, first of all, he said, I am removing the de minimis clause as far as China is concerned. That is the one. Then he says, on this, I am going to impose a duty of 125% plus 301 duty plus anti-dumping duty, etc. International parcel from China and Hong Kong, on May 2nd, he said 120%. International parcel is a per item $100. On June 1st, he has increased to $200. So this de minimis clause has been imposed. And accordingly, Chinese goods, even if it is $1, it will suffer duty. As far as India is concerned and other countries, this exemption continues. This 10% duty, etc., will not apply. The 25% duty also will not apply. Even auto component, if it is going under less than $800, will kill the exemption. Except in China, all other countries continue to enjoy this particular exemption, de minimis. Next. Now come to reciprocal tariff. By executive order 2nd April, he declared a national emergency and recognizing a threat to US economy due to persistent trade deficit. Why? In the trade deficit, what the reason is given? Lack of reciprocity in the bilateral trade relationship. That is one. Disparate tariff, not desperate, disparate tariff rates, non-tariff barriers, that is apart from the tariff barrier, the non-tariff barrier, licensing, quality control, and various objections we can do, and US study part of economic policies. If these are the reasons, and he says there's national emergency in the United States, and therefore what did he do? He said, first of all, effective from 5th of April 25, he imposed a flat rate of 10% on all products coming into the United States, anywhere. Straight. On the same day, he said, the goods coming from China, Hong Kong, or Macau will be charged at 125% duties under this law on reciprocal. Effective 9th July, the duty was increased to country-specific reciprocal tariffs ranging from 11% to 50% as per annexion. Covered countries are those with significant trade surpluses with the United States. India was also one of them, and therefore reciprocal duty was imposed and to be effective from 10th, effective from 9th. On 10th, he pressed the pass button and he says, for 90 days, I will give a respite. Countries can come and negotiate, and whether we can continue with these duties or not, reciprocal duty, we can decide. So therefore, as of now, as we are talking now, in addition to other duties, fees, taxes, exactions, etc., these duties are being charged. De minimis also charged only from the China, other countries they are not. Next. I just give a broad view of the tariff imposed by Mr. Trump on various countries. You will see various countries attracting different rates. It all depends on a simple formula, what the trade deficit about. And the formula is very simple. Apply the formula, apply the rate. In this, you will find India rate is 26%, South Korea is 25%, and you will find Myanmar, Burma is 44%. Bangladesh 37%. These are all least developed economies, and the rates are higher because the formula is applied. According to the formula, deficit is likely, therefore they. Yeah. Next. What do we do now? Should we sit down and say, hey, heavens have fallen, and therefore India has no future? As far as the Indian economy is concerned, it's going to suffer? According to me, no. The tariffs have been imposed. Even if the reciprocal tariff will revive after 90 days, what will be the position of India? I must tell you in between, as soon as Mr. Trump came in and when he was announcing reciprocal tariffs and all, there had been a meeting with the Prime Minister of India and Mr. Trump in the US talking about a free trade agreement or bilateral trade agreement. And this was followed by the meeting with by Mr. Piyush Goyal, Commerce Minister, with his counterpart in the United States. And now a full-fledged bilateral trade agreement negotiations on card. As I am speaking now, India negotiating team is sitting in the United States of Washington, D.C., negotiating with their counterparts. And if in 90 days' time or something, even if we don't get the complete list of all the negotiated different chapters, as early harvest, some chapters will be, especially the custom duties, etc., will be negotiated. That's what the press report also says. So if any negotiation takes place and duties are reduced, there's a good possibility after 90 days, this 26% duty may not apply. That I'm only thinking. You don't have to quote me. This is my understanding. It may be totally different if we are not able to conclude within 90 days' time. So that is a different political things is going on. But what I'm to say is, even if 26% duty is imposed and the bilateral agreement is not been concluded, even then, according to me, we don't have to sit down with the despair what will happen. In all these things, the winning is not because the rate, but what is winning is about the corresponding different comparable rate for other countries. If you look at the duties from China, which is astronomical, any passport terms have been issued for reciprocal tariff for all other countries, China was not exempted because they retaliated. So therefore, the duties on China is still high. Indian duty is 26%. I am talking after 90 days. Even then, 26% plus MFN rate is still much lower than the Chinese. We are seeing the press report saying that China also wants to enter into the agreement, etc. We will have to wait for another 3 to 6 months' time. Then you will get to know what really is going to happen as far as the US tariffs against various countries, including India. We are in a situation where there is turmoil, there is turbulence, there is uncertainty. The international trade is really suffering because of uncertainties. And Indian exporters are also finding it difficult because how to quote the tariffs, etc. I also know the US importers have started asking the exporters, can you share the custom duty burden? So those are definitely business decisions to be taken separately. But suffice it to say, there is not merely turbulence in the international trade because of United States taking a very aggressive position toward imposition of tariffs. Yes, next. I think, Mr. Sinha, I have completed what I wanted to say. All I would end saying that we as professionals, it is our duty to provide advices to the clients to understand what exactly is the applicable rate of custom duty in the United States. And most important thing is we must worry about what is known as the country of origin. If the goods of China are imported into India, and if you make some minor changes, an export from here saying that it's made in India, attracting lower custom duties, you'll be in deep trouble. If you are going to say it is Indian origin, then what is the quantum of non-originating goods and originating goods? How to calculate? What the formula involved? What will be the substantial transformation? There are several jurisprudence in the United States. We must understand all of them before we actually do that. So therefore, there is enough opportunity for Indian exporters, enough opportunities to understand and guide them for chartered accountants like you, but you have to work hard. This particular case is not easy. We need to necessarily work very, very carefully, because any small mistake committed by you will land them into deep trouble. However, having said that, I would say success is not sweet if there are no obstacles, according to me. So these obstacles are necessary for us to think ahead and how to circumvent and how to overcome. I won't say circumvent, how to overcome. That's probably an appropriate word. And you as professionals necessarily must consult or offer consulting to them. Many of you may not know the WTO law. You may not know the custom tariff in the United States. You may not know how to read classification of the products, etc. Yes. More important thing is identify the commodities that are being imported in the United States from various countries. What is the implications of the market share in the United States for the particular product? If there is going to be a vacuum because of the import from China will dwindle, will reduce, there is an opportunity for Indian exporters. These are the times when we have to work very hard, day and night, to help our exporters to gain their market access. I stop with this, Mr. Sinha. I need to go for other meetings. So thank you very much.
Thank you, sir. We are very much obliged to you for your gracious presence here, sir, and setting the tone for this webinar here. I'm personally thankful to you that you have accepted my request for this webinar here on the first message itself here, sir. I'm very much thankful to you, sir, that you have spared your valuable time here, sir. Thank you, sir.
My colleagues will be there and they will answer the question. Any panel, etc., they can always join. No problem.
Obliged, sir.
Thank you.
Thank you.
I'll take leave. Thank you very much.
Thank you, sir.
Thank you.
Now I will request Madam Richa ma'am to read the profile of the next speaker. And with this, we can go for the next speaker and Mr. Andrew here. And after that, we can start the discussion. Yes, Richa ma'am here.
Good evening, everyone. We would like to welcome Mr. Andreas Tuno, who is a counsel at Sidon Law, specializing in U.S. trade regulations, including customs, export controls, economic sanctions, and anti-corruption compliance. A former policy advisor at the U.S. Treasury, he advises domestic and international clients on compliance matters before various agencies. And Mr. Andrew also assists with compliance programs, due diligence, internal investigations, and enforcement proceedings. A very warm welcome, sir.
Good evening, Mr. Gautam Khattar. We would like to introduce him. Mr. Gautam is principal in PwC India with over 22 years of experience in customs and tax consulting. He advises on tax optimization, valuations, FTAs, and incentive schemes, and frequently interacts with government authorities. A noted media contributor, he holds an economic degree with an LLB from University of Delhi. Thank you.
We would also like to give a very warm welcome to Mr. Thuke Ononem, who is the managing partner at Brickman's Law and member of several prestigious professional bodies with dual qualifications in Nigeria and England and Wales. He has extensive expertise in employment, family law, real estate, regulatory compliance, and anti-money laundering, alongside a strong background in litigation at both trial and appellate levels in Nigeria and UK. A very warm welcome, sir.
We would now like to introduce Devender Bhagiaji. He is a partner at Lakshmi Kumaran and Sridharan, specializing in international trade and WTO law with over 15 years of experience. He advises Indian and global clients on trade remedies, He represents clients across various sectors, handling matters before India and international authorities like the US Department of Commerce, European Commission, and Gulf Cooperation Council. Welcome, Mr. Devendraji. Now, I would like to introduce the moderator of the today's program, Mr. Saurabh Bhattacharya. So he is the associate partner at PwC, a CA and a CPA with over 30 years of experience in corporate taxation and accounting, tax compliance and litigation. Welcome, Mr. Saurabh. Saurabh, sir, over to you.
So, should I? We have had the opportunity to hear to Mr. Lakshmi Kumaran. We have the other panelists over here who would like to share their perspectives. And to begin with, since the fulcrum of all this movement is USA, may I request Mr. Andrew from USA to share his perspective?
Absolutely. And good evening, good afternoon, everyone. It's good morning here. Again, I appreciate the introduction. Andrew Estuno. I'm counsel now, Sidon Law. For brief background, Sidon Law is an international law firm based in New York City. I am residing in their Washington, D.C. office, and we are equipped to handle on a broad array of cross-border U.S. legal matters involving both transactions, compliance with regulatory laws in the U.S., and advancing the interests of clients if litigation and or arbitration is necessary. I appreciate the invitation to speak today. My background as an attorney is rooted in trade regulation and economic controls. In the US, there are, in addition to laws passed by Congress, often the most significant rules and regulations that affect clients as it relates to trade are passed, or you would say they're enforced by the executive branch of the US government. So my experience as a former member of the Treasury Department and now someone who every day is reviewing, applying, and advancing the interests of clients for regulatory bodies, that is where I'm coming from as a general background. And as we're all aware, why we're here today, one of the most recent regimes, one of the most significant regulatory updates in recent times has been the increased tariffs, for one, and what accompanies that is also the increased enforcement initiative of this government, of this current administration. And I'm happy to be here to provide any perspective that could be useful as it relates to US law, and again, to market our services. I understand, I infer that the majority of this audience is Indian-based. We have several clients in India, and the collaboration, the cross-border economic interactions, of course, between India and the US are extremely important. I don't believe that any one tariff will stop a trading relationship, a trading relationship that's built already on positive results and economies having mutual dependence, and obvious examples of economies that rely upon one another and that are taking advantage of the greater system of free trade. So I say that at a high level because with these tariffs, yes, there are obvious limitations, if you will, or it's a tax to the US importer, but there are also now strategies that US companies in particular can take to reduce and mitigate their exposure. I'm happy to speak to those strategies today or at any other point. And I again restate my happiness to be here. Thank you.
Yes. Can we have the view of the, Gautam sir on this point here?
Yes.
So, you want me to start? Yeah. Uh, Prakash Sinha sir, should I start? Am
Yes,
I audible?
yes, yeah,
Okay.
Please.
please.
Okay. So, maybe what I can cover in the next 10, 15 minutes is what are the key sectors which, from an India perspective, have been impacted. Yeah, we've been hearing a lot about what is happening in the US, but just to get it back to India, what is which are the sectors which have been impacted? Also, what companies are looking at it? How are they looking at this in terms of opportunities or challenges? I think these 2 points or these two buckets I can cover. Maybe sort of there is a slight background at your place. Please put it on mute. So before I start, just to as Mr. Lakshmi Kumar was talking about, I just want to put the context in 1 minute that effectively today there are three buckets of tariff which the US has imposed. So one, there is a baseline tariff of 10%, which is for imports into US from any country other than China, which we saw. And then China has taxes which are now going upwards to 100% because these are also based on a certain level of existing tax tariffs. Then there is country specific reciprocal tariff. As we heard, these tariffs have been currently paused for 90 days. And these are primarily for those countries against which US has a trade deficit, and India being one of them, where the country specific reciprocal tariff has been proposed, which is 26%, which is currently paused. So, as and when the country specific reciprocal tariffs come in, the 10 would move to 26. It is not 10 plus 26, but it will be 26% as and when this happens. Currently, the date is 9th of July 2025 for these country specific reciprocal tariffs to come in. In addition to this, the third bucket of tariffs is sector specific, and this is where I'm going to focus on. These are sector specific tariffs. So, if you look at auto and auto components, which we just saw, there is a 25% tariff which is there. Auto, it's already in place. Auto components, it will come in by the 3rd of May. Then there is steel and aluminium, which is 25%, which is already in place. Also, I would want to call out sector, pharma sector, which is exempted as of today. There is no tariff. However, the US administration has come up and set up rather an investigation body which is investigating for a sector specific tariff for pharma. And therefore, we'll have to wait and watch how these tariffs for this sector pan out. So, given that these are the three, uh, a baseline tariff, and there is a country specific reciprocal tariff which is currently paused, and there is a sector specific, it is relevant to look at what are those sectors from India which is today impacted or there is an opportunity. So, if I look at India, so there are, and if you look at the top 10 Indian exports to the US, the first one which is there is gems and jewelry. So, in gems and jewelry, the competition as we see to India is Switzerland. And when you look at the reciprocal tariffs which have been announced, for India it is 26 and for Switzerland it is 31. So, purely on the tariff arbitrage, the gems and jewelry sector is advantageously placed, and therefore there is an opportunity to capture a larger market share in the US. Now, that is one part. However, the key question is also whether the existing tariff of 26% or the existing tariff of 10, which is a baseline tariff, and 10 going to 26, whether this sector can absorb it or not. That is also a question which is there, and we'll come to how companies are looking at tackling that question. But simply in terms of tariff arbitrage, the point I was making is that compared to the Indian competition from Switzerland, Indian exporters may be better placed. Likewise, if you look at electronics, which is currently exempt. Certain electronics are exempt. Vis-a-vis the competition for electronics exports from India is China. And as I said, China is already at 200 upwards percentage. So clearly, there is an advantage for electronics exporters, and we've been seeing that in the press media that there have been a lot of piling up of electronic goods in the US. There is a lot of export happening from India, and that also happened before the 10% came in, and even after the 10, when the before the pause for the reciprocal tariff happened, there was a lot of shipments going out. So clearly, this ramping up manufacturing, getting larger exports to the US from India. So therefore, this sector clearly again has a tariff arbitrage in its favor. In addition to electronics, there is also a textiles. Textiles is also one of the key exporters from India into the US market. Again, the competition for textiles for India is companies from China. Clearly, today textiles is 10%. As I mentioned, China is also upwards 200. So, like the electronics segment, the textiles and apparels is also one of the sectors. And in addition to that, mechanical appliances, which also compete with China. Clearly, these three, which is again to name textiles, mechanical appliances, and electronics, vis-a-vis China, there is a potential for the Indian exporters to look at purely in terms of tariff arbitrage. I acknowledge that there are other incidences in terms of cost and cost, transportation, infrastructure, and you need to look at various other secondary costs. But the point I'm making right now is purely on the tariff arbitrage, which is the sectoral, which is the country-specific reciprocal tariffs which will come in, and therefore these three sectors are relevant to look at. And obviously, the fourth one is gems and jewelry, which I started off with. Uh, Also, on the flip side, so these were some sectors which you see India would have an advantage. On the flip side, the other sectors is a chemical sector where India uh, is competing with Germany. Now, again, in terms of tariff arbitrage, Germany is pegged at 20% reciprocal tariff, whereas India is 26. So there, India would have a competition or a difficult time in terms of chemical exports. Chemicals is also one of the top 10 exports from India into US, and therefore these exporters would need to look at more efficient ways in terms of reducing costs to compete in the market. Beyond these sectors, again, a few call outs. One is pharma. As I mentioned, while pharma sector is currently exempt, there is the sector needs to think about how they can partner with the government in terms of the government negotiations with US on a bilateral trade, so that the sector specific tariffs do not hit the pharma sector. What is relevant, I want to also mention in this pharmaceutical sector is medical devices are not covered under pharmaceuticals. Medical devices continue to be at the base rate of 10% and country specific reciprocal tariff of 26. Pharma is more on in terms of drugs and medicines, uh, which is currently exempt. Finally, auto sector. We just heard Mr. Lakshmi Kumar talk about auto sector also, where it is 25%, which is there for automobiles and auto components. This 25% is common across the globe, and therefore, uh, what would be relevant for this sector is to see, like the chemical sector, how best they can bring in more efficiency in terms of costing and manufacturing to compete with this 25% tariff. More importantly, because from Mexico, auto components getting into US, to the extent they are covered in the Mexico and US treaty, would be exempt. So that over there will be a more push from Mexico into the US market for auto components vis-a-vis other countries into the US. So that's the broad sectors where we said that there are certain sectors which may gain purely from arbitrage. There are certain sectors which may be more stressed or challenged because of these tariffs. Uh, with this, maybe if I take another 5 minutes, if it's okay, Saurabh and Mr. Prakash Sinha, on what,
Please,
how,
please proceed, Gautam.
how businesses are also looking at. So these were the sectors, but what is also important is how businesses are looking at this change and these uncertainty. And when I say businesses, generally our discussions and what we've been hearing from businesses is there has to be a short term strategy and then there has to be a medium and long term strategy. Because today things are very fluid and therefore it is very difficult to uh, come out with and implement things in terms of what could be a medium or a long term strategy. Also, the uncertainty is that since the tariffs have paused, therefore the US administration would be looking at more of getting countries on board and negotiate deals. So therefore companies are more focused on a short-term solution at this point. So when I talk about solutioning or the thoughts which companies have, I'll probably break it down into four buckets to keep it simple. The first is companies are wanting to understand what is the dollar impact, what is the additional cost of sending goods into US. Now, what we need to know is there are countries specific reciprocal tariffs. So, when goods are exported from India, whether it's actually an India origin and therefore it should be 26%, or whether it has more than enough China content of China to qualify it as China origin, even though it is going from India and therefore uh, be taxed at a higher rate of 200%, which is applicable for China. So, one, there is a level of technical evaluation into rules of origin, which is in US, they have US non-preferential rules of origin, and therefore the origin has to be determined based on those. And currently, as we speak, a lot of manpower at the US customs is doing this, which is evaluating whether the origin as declared is correct or not by the companies which are exporting goods into the US. So it will be very important to ascertain what is the origin and therefore what is the dollar impact of this. Also, a short term point is contracting. So typically, prior to this tariffs which came in, the tariffs were fairly in US on a lower side. You know, it was 2% to 5% for some most of the goods, and the Incoterms which companies were using were DDP, which is delivered duty paid. An Indian exporter sending it was responsible to bear the cost of duties and deliver the goods to the customer in the US. With this change, now the 25 or 26% for India, which is going to come in, is also going to be borne by the Indian exporter. So, therefore, in a sense, the entire margin could get wiped off because the margins are limited. And therefore, if the Incoterms were or continue to be duty DDP, in my example, then the exporters have a difficult time because they will land up bearing the entire cost on account of tariffs and therefore wiping out their margin. So, in terms of their contracts, companies are revisiting their contracts to see what terms they have with the customers, whether they can renegotiate. And with so much fluidity around, companies are now looking at short term contracting and not long term because they do not know how these tariffs would pan out in 90 days. So that's one part in terms of the financial impact, which is the dollar impact based on origin. Also looking at contracting, short-term contracting, how are we placed, who is bearing this additional cost. So this is something which companies are looking at. In addition, in short term, also what companies are looking at is how will the cross-country implication pan out. What do I mean by cross-country is, again, taking an example with China alone. Today, Indian exports are at 10% of, let's say, electronics goods. From China to US, it is 200%. Now, if China is unable to send goods into US, they will look at alternate markets. So is there a potential of goods being dumped into the Indian market? And therefore, whether the Indian companies foresee that they will lose their market share within India. And therefore, that is one thought which is there. How do you protect your existing share in India market against any potential dumping? There are legal measures. There is strong anti-dumping provisions which are there, and therefore obviously you could make use of those, but that's a process which you'll have to go through. There are regulations like BIS which could help and support companies, uh, so that there are not goods coming in into India and just being dumped. So while there are regulations, I believe they can come to support of a lot of Indian companies. But before that, there is already a thought process that how does one protect its Indian market from dumping from outside. Also, what is of interest is the companies are looking at, because of the rate arbitrage, is there a potential that they can grow their share in the US market? If India is 26, and even let's say Bangladesh, it's upwards 30%, and even Pakistan is upwards 30%, and let's talk about textiles as a sector. While I said China is a competition, but even we know the neighboring countries are producing good textiles. They are also, Bangladesh is upward 30. So clearly there is a potential that India can also look at growing its market share in the US market because of the tariff arbitrage. All this comes with a layer of costing. How do you look at infrastructure cost? How do you look at your cost of manufacturing? Obviously, all those points are case specific, which needs to be looked at. And I'm commenting more from a tariff arbitrage, and therefore the discussion in this second bucket of cross country implication is to safeguard your existing Indian market from dumping and to look at expanding your share in the US market. So these are the two short term measures which companies are looking at. Moving to more of a medium and long term discussion, which companies are having. Again, this is more of a whiteboard exercise where obviously it's very difficult to start implementing things immediately, but companies are evolving their thought process around some of this. First being supply chain reorientation. When I say supply chain reorientation, companies are looking at how can they get raw materials at a better price. Can they import raw materials from countries where India has free trade agreements so that the duty costs are lower? Also, on the output side, they're also looking at whether reliance on US market is good or they should look at alternate markets. Interestingly, things are coming up as UK or EU markets. Why UK and EU markets are also being looked at is because the government of India is now fast tracking its FTA discussions with some of these countries, and then there are the Middle Eastern countries also wherein the Indian government is talking, but uh, EU and UK being larger developed countries where there is a potential market which can grow for India. So therefore, looking at newer markets is also a thought process which is getting evolved. Finally, more of a future strategy where companies look at expanding. We saw during COVID how things panned up. There was China plus one discussion. Now, also the event which is happening, there is a parallel which everyone is drawing with COVID, that we will feel the pain if you're not now but some few months down the lane, and therefore you need to have uh, alternate sourcing, alternate manufacturing, multiple source of multiple destinations of manufacturing, or origins of manufacturing. And therefore, when companies look at expansion in terms of future strategy, they are open to consider countries which are geopolitically stable. So if Middle East is geopolitically stable, why not set up something there rather than India? And vice versa, why set up something in China and not in India. So these are discussions.
Mr. Gautam, I will come on the issue of the geopolitical later on here. I
Yeah,
just wanted to learn something from the African context here. Saurav sir, can we invite Mr. Ononim to on this part here, on the issue what we have discussed till now, short-term and long-term strategy,
Yes,
what the
yes, of
Africa is
course.
talking about?
Yes, of course. To summarize what he said, the short-term strategy is perhaps to take benefit of the rate arbitrage. The medium term is to see any alternative market, and third is the long-term one is to find out any China plus one type of thing. So this is what Gautam has the major points which Gautam has stated. Now welcome Mr. Othuke to talk from his perspective, the African perspective, which would be a very interesting one for all of us here.
Thank you very much. Thank you very much, Rav, for the opportunity to speak and share the African perspective in relation to the tariffs of Mr. Trump. I'll start by way of an introduction of how the tariffs have evolved in regards to Mr. Trump, and I'll start with the tariffs that were introduced under the first Trump administration, which is Trump 1. There were tariffs introduced then, but they were primarily aimed at China, but there was an indirect impact on African countries, which is nuanced, and some of those I'll just give a slight overview of the impact on African countries with Trump 1. Now, the tariffs imposed was imposed under Section 301 of the Trade Act of 1974 in the US, and it targeted steel and aluminium imports globally, including Africa, under Section 232, citing national security concerns.
Mr. Ononim.
Yes, can you hear me?
Just one request. Can you just speak louder here?
Okay, that's fine. I'll try and make it
closer to the system.
Yeah,
perhaps.
I think I'll get my mic a bit closer. Is that better?
Please. Yeah.
Yeah.
Okay. All right. So, under Section 232, South Africa was mostly affected. It's a neutral exporter of steel and aluminium to the US, and it faced a 25% tariff on steel and 10% on aluminium, impacting trade volumes and creating uncertainty. The South African Department for Trade and Industry lobbied for an exemption, which was not granted. Also, there were other countries that were also affected, countries like Kenya, Ethiopia, Lesotho, and Ghana. Things like textiles and apparels were also other goods that were affected under Trump 1, and these were the ones that affected the countries I just mentioned. Well, although not directly targeted, US-China supply chain disruptions caused input price volatility, as many African textile producers source materials from Asia. Now, I'm going to now piggyback onto Trump 2, which is the focus of this particular webinar. Now, under Trump 2, in March, sweeping tariffs were imposed by the Trump administration in Trump 2, particularly from China. But it also affected a lot of African countries, and the African countries that were affected, all the African countries, like other speakers have said, 10% tariffs were introduced for every single country. However, the African countries in general have had varying tariffs imposed from 10% up to, from 14% for the smallest one, which is Nigeria, 13% for Equatorial Guinea, up to 50% for Lesotho, and these have had several impacts. Now let me look at the impact it's had. African exports to the US remain relatively limited in volume and diversification. However, certain sectors may experience ripple effects, including textiles and apparel, which Ghana and Kenya are the main countries. The AGOA has facilitated access to US markets, but intensified protectionism may indirectly limit demand. Minerals and raw materials. The countries that mainly affected are South Africa and Nigeria. There is demand fluctuation from China, Europe, and redirected US supply routes that could affect commodity prices. And then agricultural products, with Morocco and Ghana being the main countries being affected. Africa may face stricter compliance requirements or logistical delays due to disrupted trade routes. Overall, African exports are not direct targets. Now, this then throws up opportunities for other countries, like has been stated, and these are the areas we seek to diversify away from China to mitigate tariffs. Africa is increasingly seen as a potential alternative hubs, and benefits of this include lower labor costs, preferential trade access. For example, the EU-Africa Economic Partnership Agreements, AGOA in the US, untapped manufacturing capacity. Now, key examples are the following. Morocco has expanded automotive manufacturing and aerospace assembly sectors with strong EU links. Kenya and Ghana are piloting special economic zones with digital infrastructure. Nigeria is promoting its Lekki Free Trade Zone and AFCA focused export strategies. However, for Africa to fully benefit from these, strategic investment and reforms are also needed, which will bring Africa, bring it in line with current trade practices in other parts of the world. The thing is, China remains Africa's largest bilateral trade partner, with a dominant financial backing for infrastructural development in Africa. A lot of the infrastructural developments and projects that are ongoing at the moment are primarily borne by Chinese loans. And for examples of these are Kenya's SGR and Nigeria's Zungeru hydropower, and also manufacturing zones and industrial parks funded by Chinese entities across Africa. So while Chinese presence provides leverage for Africa to offer ready-made platforms to alternative investors, for example, Western firms, it may also complicate diversification efforts if Chinese influence leads to alignment with anti-Western blocs. Now, what is the readiness of African countries to capture supply chain shifts? Nigeria, I'll start with Nigeria. The strength that Nigeria has in this regard is there's a huge domestic market, just like the Indian market is. Nigeria has an abundance of oil and gas, and there are active free trade zones, and the AFCA push. I'll talk on AFCA afterwards, and I'll throw a bit more light on that afterwards. On the weaknesses in Nigeria, infrastructural gaps, energy reliability, and currency volatility. In relation to Ghana, because I'm just going to, for Africa, obviously I'm not going to take all the
Hello?
I think we have lost. He's probably dropped off.
Yeah, dropped off. I think we can continue with the next speaker, and then when he joins back, he can again talk.
Yeah, yes, yes, please. Andrew want to
Countries.
speak something
Yes,
on the
hello.
technical point here before we switch off. Yes.
He is
Well,
disconnected.
well,
Maybe he's rejoining. Just give, yeah.
Sorry,
Yes.
He
I
is
think
back.
So
I think my internet just sort of
okay, okay.
threw
Just,
me out for a minute. Can you
on
guys
an
hear me?
yeah,
Yes.
yeah. On an just tell us that when China, when the China has a very significant influence over the Africa,
Yes.
how do you think that whether the China will dump their material in Africa or China will start manufacturing in Africa and then export to US in order to get rid of the 200% tariff?
That
Because
is
China
that
has
is
a
that
very
is a
big influence
possibility.
over Africa.
Yes, that is a possibility. However, there are drawbacks and there are infrastructural problems that could arise for that to happen. It's probably easier for China to shift its manufacturing to India, which is it's a closer there's a closer distance in terms of travel time
No, I'm talking about China shifting the base to Africa.
that's what I'm saying. So
Yeah,
in order for that to happen, the infrastructural issues have to then be developed properly to
yeah.
put them in line before China can do that. If that comes in, it's certainly a possibility. However, I mean, I think America has made it quite clear that any countries that toe the line with China, they will impose the tariffs on them as well. So there will be that as well. So yeah, these are all options that are on the table anyway, and it's worth discussing.
Or just take the Andrew view. This one, how the US is looking into, because Andrew has not given any technical inputs before we come to this one. So
Other speakers.
yeah, yeah.
yeah,
And
thank you. Is there a specific question you'd like me to answer? I'd be happy to.
and Andrew, this is how the US looks at this issue. And
I mean,
see
just
that
to clarify, yes, what Mr. Prakash is telling is that various countries are thinking of the ways in which they will respond to these tariff moves by US, either trying to take arbitrage of rates or, for that matter, shifting manufacturing elsewhere. How will be the US response to these various moves by various countries? If Andrew could explain something on that. Prakash ji, is this the question you are
yeah,
having in
yeah,
mind?
yeah.
Okay.
Okay.
You can switch on your camera, Andrew.
Yes, yeah, thank you. There was a bandwidth issue earlier, so let me just speak on audio right now. But
We
at a high level, we should understand that there's the perspective of the regulator, obviously. So they're the ones that are setting the tariff rate, collecting, enforcing said tariff. There's also the perspective of the tariff payor, which is the importer of record. So when you ask about the U.S. response, I think what's most pertinent is to talk now about what's the response of industry. The U.S. importers, again, the ones that are paying the tariff, the ones that have to absorb this liability, how will they respond? And that's what I'm doing as a professional. I'm advising an array of industries and importers across a number of industries, importers of record, parties that again are responsible for this obligation. And strategies do exist, however, to maintain existing supply relationships while still honoring increased tariff obligations. but not to the full extent that that this administration perhaps first envisioned. And where I'm going with that is there are certain rules that, from my perspective, industries did not have a reason to fully understand until today. And one of those rules is what's called the rule of substantial transformation, which indicates the country of origin of a given imported item, and which also then relates to the tariff classification and in follow up the tariff rate that's associated with that import. Another principle, another rule at play is what's called the rule of first sale, which allows importers of record to calculate the tariff rate based on the value of the item at the location of its original production and manufacturing to where it was first sold. And this comes up when you have a distributor, you have a multi-tiered supply arrangement where there's a distributor or there's a supplier that's sitting in between the original manufacturer and the ultimate importer. Another strategy that exists is the importer negotiating and allocating the tariff burden across the supply chain network. So to come to terms on how a tariff is going to be the burden, in other words, how that's going to be allocated and shared jointly between distributors, suppliers, and vendors so that everyone maintains their seat at the table. And I've been told, anecdotally, that this strategy actually is already being used quite a bit in recent days and weeks following these announcements, and that it shows that the foreign exporter is very sensitive to the obligations, the added burdens that are now incumbent upon U.S. importers, and they're willing to make concessions to maintain the overall existing trade relations. So that I think is very telling, and that creates an important opportunity for someone like myself as a trade attorney to then go and advise clients, advise importers on renegotiating, or at least with respect to the provision as it relates to payment and obligations of tariffs, to renegotiate that provision among the supply chain parties. Finally, I just want to briefly mention that there are certain strategies that exist which regard classification. This is basically the essence of how tariffs are calculated. Each item that comes into the country is given a certain classification code by the United States Customs authorities. And right now there's never been a better time to conduct what I would call a classification audit of any imported item coming into the country. And I have been working with consultants recently. They're very busy in this space, but this is an opportunity to ensure that the correct and ideally the lowest rate possible is indeed being charged. So when you ask about, what is the U.S. response, I think obviously we have geopolitics. There's the overall political agenda, the economic agenda of this administration. But where I think it becomes most interesting and where I can provide the most value as a private sector attorney is ensuring parties' compliance and also implementing effective strategies to reduce these newly added burdens. Thank you.
On the
Yes, about the, can you ask Saurabh about the WTO, how the WTO is whether functional in the US or
so I think Andrew is best placed to take that on.
So that's a very interesting point, and as many in this room might already be aware, in theory, the WTO exists as a viable forum to allege that tariffs, newly imposed tariffs, violate existing free trade principles. However, there is a huge practical roadblock which goes back now several years and it across multiple administrations in the US, and that is that the appellate body of the WTO, it has not been fully seated. There are nominations that are still pending, which results in essence that the WTO is not a forum that can ultimately decide and ultimately enforce trade disputes. So that is a practical roadblock. It's not. I don't think it's right now seen as a as viable as certainly as it once was or as it was envisaged. So parties that feel as though the tariff, certainly in the U.S., if they take the position that this tariff goes above what the law allows, the most viable mechanism, the most viable means of pursuing that argument and pursuing that challenge is in federal court on the basis that the administration overstepped its authorities under Section 232 and another statute, which is called IEPA, which does grant the executive branch discrete authorities to regulate trade issues, to impose tariffs above and beyond what Congress inherently has the right to do. So that's in our first speaker today, of course, went into great detail on how the newly imposed tariffs fall under these executive authorities. There are challenges already. There have been complaints filed in the federal courts. It should be known that generally speaking on these issues, the executive branch is given rather wide discretion, and it's the standard is certainly a very high one to overturn any type of executive decision in rulemaking. But I would say from a high level, the international system does not really support, at least not nearly as much as it used to support, challenges brought by parties alleging for unfair trade practices.
So, certain things like the geopolitical aspect, which Gautam referred to, the breakdown of the appellate machinery under the WTO, how it impacts traders with US. All these things we will come back in a later part of the discussion. And so, right now, perhaps we should invite Mr. Devendra to share his perspective, and then take up the questions which have been raised by the respective speakers in their respective slots.
Sure. Thank you, Mr. Bhattacharya. My voice, I hope, is audible.
Yes, sir. Can you speak a bit louder here, sir?
Oh, sure. Thank you. Okay. I'll try to be a bit louder. Is my voice clear now?
Yes, yes, sir.
Okay. Thank you. Thank you, Senaji, and thank you, Mr. Bhattacharya. I would like to share my views, although I have prepared a small slide deck. How much time do I have actually? Because it's already 7. Do I have 15, 20 minutes? Do I have 20 minutes? You're on mute.
You are in the mute. Saurabh, you are in the mute.
Sorry. I thought 20 minutes for Mr. Devinder will be fine, because that will leave us with another 10 minutes for taking up questions as well as issues which have been raised but fully could not be completed by the respective speakers.
Sure. Sure. Thank you. So I will touch upon a few points because I was given a topic pertaining to WTO and the global perspectives on the trade agreement, how India is faring with the US on the BTA. I would begin by the WTO. I would touch upon what point Andrew was speaking on the appellate body. In fact, I wanted to give the perspective to the practitioners here on what has happened. What is the US position actually on the on the WTO issues. And for that, I'll just share my screen. It will be better for the speakers here. Yeah, my screen is visible, right?
Yes, sir.
Okay, thank you. See, just to talk about the WTO perspective here, just put to the presentation mode. Actually, when we talk about WTO, what is the US position on it? Let us understand that. When we go back to how the WTO was formed, of course, every country had its own political cloud basis, which it used to impose tariffs and it used to dominate the international trade. But then countries got together and formed the GATT in 1947, ultimately leading to the formation of the WTO in 1995. Where they advocated the rule-based international trade. What does it mean? There are certain principles there. Lakshmi sir touched upon that. The MFN principle. What is that in crude terms? It is the most favored nation principle. It means that if a country imposes customs duties at a particular level against a country, then the same has to be immediately and unconditionally extended to other countries. Any concessions have to be extended on customs duties front. That is called as most favored nation principles. That means I will treat all nations, all WTO nations which are part of the agreement as most favored. That's the cornerstone of the WTO trading system. Now, how does US takes it, and how does it US? What is the US position on this? Under the WTO law, under the GATT agreement, there is a clause which is Article 21, 21B to be exact. That's known as security exception. So if you notice all the US executive orders which have come in, they refer to national security of the US. What does this principle, sort of mean? This principle allows a member to overcome or violate the WTO principles. The principle of scheduled bound rates, the principle of MFN can be violated if you are covered under the security exception. And US position historically has been that this particular security exception, when I invoke, I am the self-judging person. I judge when this is to be invoked because the rule says when it is considered necessary. And therefore, US has been invoking this principle to violate WTO and sort of impose. Now, recently we've seen, these EOs issued where they refer to security exception, the national security principle, and then impose country reciprocal tariffs, etc., etc. Now, is this right? First of all, the WTO bodies have already held that this is wrong because this principle, when it says that action has to be taken, those kinds of violations can be done when there is an emergency in international relations. That's what the language of the WTO provision is. And there have already been, US has already lost cases in the WTO on this particular point. The specific point is the other two main cases where Russia traffic and transit case where in 2019 the WTO body held that this was a case where actually Russia had blocked certain traffic of international transit of goods from Ukraine to Kazakhstan because of the war situation going on there. In that context, an argument was raised before WTO panel that this is a self-judging principle. So countries are self-judge this and then come out with that this is a situation where I can invoke this principle, I can invoke this exception, and it cannot be taken to the WTO. The judges held no, this is a justiciable principle. Countries can come to the WTO court and seek remedy and seek an interpretation whether this is covered by the security exception. In that case, it was held to be justified because there was actually a warlike situation. But US actually lost the another case on US origin marking requirements, which was a case where certain goods when it coming from Hong Kong, US said that you mark it as China because now Hong Kong was of course now administered by China in that sense, and they took the cue from human rights violations in Hong Kong, and they say therefore we invoke this emergency in international relations principle. US bodies, the WTO court said, no, you're wrong. Actually, this can be invoked only when there is a warlike situation. you cannot invoke this principle in every situation. And that's how US lost this case. And there have been series of cases, even Section 301 duties, Section 232 duties. US has actually lost cases in WTO panel. And this is the precise reason, whereas US invokes security exception and they lose the case, and therefore they stopped appointing judges before the WTO panel. And the appellate body. And when they stopped appointing judges, you can consider a situation where SSCs in India have nowhere to go. There's a demand, from the government of taxes, and there is no court to decide. So what will happen? It will be anarchy. So therefore, actually, this has happened in the WTO. US continues to invoke national security exception. The appellate bodies continue to the panels continue to reject that, and but they stop appointing judges. In fact, Mr. Trump came in first term, he is the one who stopped appointing judges, and Mr. Biden continued that. And finally, we are completely defunct now. There is no appellate body mechanism, unfortunately, in the WTO, and that's how the fate of the WTO is actually. I wanted to cover the terms of reference, because this is also one of the topics given to me and the BTA. Just beginning with I just wanted to show as to what has been the progress till date on this particular front. This is the first one where our Prime Minister, Mr. Modi, went to the US, and there was a compact, they called it, association in terms of military partnership and accelerated trade. So they're talking about defense cooperation. They're talking about Indian businesses today have a chance of cooperation with the US companies for collaboration on defense sectors. And US and India agreed to that in their joint statement. We're talking about manufacturing and agriculture cooperation, in the sense that US wants our market in terms of their farm products. Of course, that's a contentious issue, but it needs to be seen as to on what commodities India agrees to. India wants US market in terms of labor intensive products. And Gautam already talked about textiles. Certain other sectors are chemicals, plastics, leather, where on the labor intensive side, where US in production in US would not be cost effective. India would be more cost effective, and India already has a good size of manufacturing in that. So we're talking about cooperation in that front. So businesses in that sector have a chance to grow their businesses. We're talking about energy, where US wants more energies to be imported into India from US. We're talking about technology cooperation in terms of data centers, compute capabilities, AI, where I'll talk in my future, in my subsequent slide, how US is categorizing countries in terms of adversaries and allies, in terms of these strategic sectors. And there is cooperation in space also. I just tried to jot down, how different dignitaries and officials have sort of met each other right from February 13th, when the meeting which our Prime Minister had. After that, there is a meeting on 16th March, 17th March, 28th March, and importantly, USTR. Mr. Brendan also came to India. There was a meetings from 25th to 29th. And today, as we speak, Mr. Rajesh Agarwal, who's the additional secretary, is actually in Washington negotiating for 3 days the contours of the BTA with the US. Of course, the vice president of the US is in India, and he discussed with Mr. Modi the contours of the trade agreement. The point I'm trying to make here is that India and US are warming up to, and everybody is looking at entering into BTA in 2025. Then there was a reference to terms of reference. What is this terms of reference actually? Terms of reference is actually a framework in which you sort of jot down as to what points you will cover in the agreement. The press reports from the officials say that there are 19 chapters, including goods, services, non-tariff barriers. They also importantly going to cover services in this. So how service flows can happen. I mean, service flows in terms of our professionals going there, their professionals working here. Those are also certain things which can enter into the BTA negotiations. When we look at the US side, they say that we want access in terms of automobiles, energy products, wines, high-tech sectors, agricultural goods, whereas India says that we want access in terms of labor intensive sectors like apparels, textiles, gems and jewelry. Of course, Gautam talked about it, leather, plastics, chemicals. And then our farmers and fishermen want shrimp exports, which India already has a good amount of share. So this is what we're talking about. I think we are progressing in the right direction. Although US says that your tariff rate is much higher than us, they say that India tariffs at 17%, whereas we tariff only at 3%. I think in terms of BTA, when we enter into this can be taken care of. These are certain trade agreements which US has and which India has, of course. Recent one additions to India are the India-US agreement, India-Australia agreement, and the India-UAE agreement. We also enter into India EFTA, which is the European Free Trade Agreement, which includes Switzerland, Iceland, Norway, and Liechtenstein. I think these are the important agreements which businesses should look at to modify their supply chains, relook at their supply chains, as Gautam was also talking about. These agreements can be taken advantage of in terms of both raw material supply chains and finished goods supply chains. I just wanted to touch upon America First trade policy. This is nothing but where US is talking about bucketing countries as foreign adversaries, namely China, Cuba, etc. Those are termed as foreign adversaries, and US is looking very closely at strategic sectors. So investments to and fro. They're trying to restrict it to China, and they by terming them as foreign adversaries. And that sort of opportunity is with India because India there's a warm relationship and cooperation of our businesses on sectors like healthcare, energy, strategic sectors like semiconductors. There can be chances of cooperation on that front with our businesses there. Most importantly, Indian businesses should carefully look at their supply chain, because if if there is a demonstrable link to certain foreign adversaries, so we are importing some important components from China. Those are the things which businesses should importantly look at, because then US investments could come into scrutiny, both to and fro. So those are certain things which our businesses should look at actually. I just wanted to touch base upon supply chain shifts also. These reciprocal tariffs, of course, Gautam talked about how tariff arbitrage sort of comes into play for various sectors. In addition to that, one must know that reciprocal tariffs have an exemption also. A US content exemption is there. So if today you're importing a US component and using it for manufacture of finished goods in India, and when that goods lands in US, you can claim an exemption on the US component part of it, provided it is more than 20% of the value. And that effectively reduces the tariff amount, tariff percentage, the tariff amount which the US has imposed, the 10%. In fact, I'm already getting client queries on if they're importing, let's say, steel from Europe. So can they shift it from Europe to US? And get an exemption from this amount. So these are certain tariff shift possibilities where we can sort of reduce the tariff, the effective tariff which is applicable on exports from India and become more competitive. Of course, substantial transformation test I have not deal with because already Andrew has also stated, Lakshmi sir also stated on that. That's a very important thing to determine. Section 232 tariffs are, of course, if you import steel, aluminum from US, you get an exemption from those tariffs. So that is one more supply chain shift which businesses can look at. Businesses should also look at de-risking their supply chain away from high tariff countries, particularly China. Because today, as Andrew also said, and I also keep talking to US lawyers and as to how the US CEP is very closely looking at the country of origin. So if you import certain goods from China, use it for manufacture of certain goods in India, and then those goods are exported to the US, whether the country of origin is actually US or India, China or India, is very important to determine. One more thing is the transfer pricing models reworking. That comes into play when businesses want to reduce the tariff impact by change of transfer pricing. How can that happen? Today, when businesses are looking at selling into the US through agents, and particularly low risk distributor models, if we sort of try to set up a subsidiary there, which works on a buy sell basis, and they take the decisions as to formation of contracts, finding customers, etc. Can there be a a shift on the price? I can charge a lesser price, and more profits can be in the subsidiary, and thereby reducing the tariff impact of the duties. So those are certain things which businesses are looking at in view of the tariff changes. Um, I think I'll not go to the origin of this thing. I think there's a lot of this has been said already. But I would just like to point out one case of the US of cyber power systems in 2023. That's a very important one, recent one, where certain UPSs were made in Philippines, and they were shipped to there were some components from China, and they were making UPS in Philippines, and they were shipping to the US. The question came whether they are Chinese origin and therefore would suffer the 301 tariffs, or they are Philippines made and therefore should not suffer those tariffs. The court held that because the printed circuit board assembly was done in Philippines for one of the models, that fulfilled the substantial transformation test. But for those UPSs where PCBA itself was imported from China, I mean, the populated assemblies was imported from China, and even though the assembly operations were done in Philippines, still they were Chinese origin goods. So therefore, businesses should look at very carefully the substantial transformation test in terms of US court rulings. US has, of course, also withdrawn from the global tax deal. And what implications does it has? It needs to be seen, because US wants to attract businesses there. You come here, manufacture goods in US, I will charge you less income tax. Even though that may violate the OECD principles of global minimum tax of 15%, but US is that's why withdrawn from the global OECD tax deal. India also has in view of the US concerns, has withdrawn the equalization levy, which it imposed on e-commerce operators and advertising services from overseas. India was banking upon the fact that countries would go forward with the OECD tax deal and would ultimately have under pillar 2 global minimum tax, but US has ultimately withdrawn from it. So it needs to be seen whether India reintroduces these. I don't see that happening in near future, because of the concerns and the negotiations which India is having with the US. But it needs to be seen how India takes its position with respect to these going forward. I think that's the last portion of my slide deck. I just wanted to show this, how India is caught in two separate, trade shifts. On one hand, when you see US, they talk about America first. They talk about withdrawing from Paris Agreement. They talk about tariffs. They talk about sanctions. They talk about renegotiating of free trade agreements. They talk about targeting currency manipulators, and they talk about discarding equity principles, the diversity principles. They talk about encouraging fossil fuels and discouraging ESG measures. But when you look at EU is talking about sustainable manufacturing. EU is talking about doubling down the standards of Paris Agreement. They're talking about CBAMs and sanctions. So therefore, we see a clear, two blocks, where US is moving in a different direction and EU is moving in a different direction. Of course, both the markets are important for India. India has good amount of exports to EU. India wants to retain good amount of exports to US also. And therefore, Indian businesses have to calibrate and think about it as to how to navigate both the blocks here. Because of course, as we all know, India is also negotiating deals with EU and UK. We are our policies are also there in terms of PLIs. We are encouraging Make in India. We are encouraging to protect our domestic businesses. We are having BIS and other trade remedial measures. So India needs to take a very careful approach. On one hand, you have a rule-based and a climate-based sustainable product system on the EU. On one hand, you have the US, where a dramatic shift is happening. I just wanted to point that out. I think I've covered it. Yeah. I'll be happy to take your
Thanks.
questions. I'll try to share
Thanks,
that.
Mr. Devinder. It's a very insightful presentation. We have we are on the last 5 minutes of our presentation. Very quickly, Gautam, you are referring to some geopolitical aspects of this. If you could quickly touch upon that, and then we can talk to others for their other pending matters.
Yeah. So the last point which I was talking about was future strategies. What we've seen companies looking at when you're looking at expansion of businesses. This is more of a long-term vision to say that do they look at countries which are geopolitical stable. So is expanding uh, better in India versus UAE? So that's also a thought which companies are started coming in and started thinking. So that was the point I was making. Why? Because let's say in my example of UAE will continue to be 10% if the baseline at a baseline tariff when the country specific reciprocal tariffs come in, because UAE is not covered under a country specific. So there is again uh, a more tariff arbitrage, and over and above that, the environment could be more friendlier. They also have a lot of trade facilitation measures. They have, in terms of infrastructure, most cost effectiveness. So those are the additional parameters which would be there. The last point I just wanted to make, Saurabh, is that while we've been talking about tariffs, there are multiple other factors which are also now coming into play. We saw uh, the China shipping. There is a tax or a fee being levied in US. They are also charging additional amounts. So when we are looking at these financial burdens, now it has become more of an economics in terms of beyond tariffs. How does my logistics and infrastructure cost come into play? How does energy price fluctuations come into play? How does currency fluctuation and interest rate fluctuations come into play? So I think these are elements which are now getting beyond the routine. And again, to repeat that, drawing a parallel from COVID, maybe the impact would be seen as we go down this. If companies are not seeing the impact now, maybe next few months, you will see that impact really setting in. Yeah, thank you.
Yeah, so I'll come to Andrew. Mr. Devinder has made a very detailed presentation on the WTO and the appellate machinery in that breaking down, and US repeatedly invoking the security concern as an issue for taking steps unilaterally. So, how do you see this sort of a dispute panning out? Because this is leading to, I mean, the impression that I got is that it is a sort of a not a very structured way of settling disputes. And if you are referring to access to the federal court, I'm just thinking, suppose an importer to the US is faced with such an action, and then that importer has no central dispute authority to go to, which court does he go to? Does he go to the US court, or does he go to his own court and ask for help in a foreign country? How does it work out? I mean, what is your experience in that?
Is that question to me,
No,
Saurabh?
it was to Andrew. I
Okay, sure.
wanted him to respond to
Okay.
the WTO thing that you have made, that you
Sure,
have
sure.
presented over there.
Mr. Andrew?
Seems he's not there, and
I
we
may
are
I may try
almost.
and answer that if you permit
Yeah,
me. Yeah.
that's right. Yeah.
According to me, as Andrew was referring to earlier, WTO mechanism, of course, is a country to country mechanism. There only countries can file a case. Local courts, of course, SSCs can go, and local importers, exporters can go. The point here is that the jurisprudence is that domestic law is always preferred over the international law. If a domestic law talks about a particular way of doing things, if if you're doing things in that manner, irrespective of if the international law sort of is contrary to that, then courts will give preference to domestic law. That's the Indian principle also. Supreme Court has held in GM exports. Whereas, so if you look at and one more thing important is on the tax front, a lot of leeway is given to executive actually. Therefore, according to me, these things will of course play out in the US courts, but I don't see them settling too much, because I remember one case relating to 301 where CIT has given a decision in favor of US that the action was right. China is violating IPR rights, therefore US can invoke this, and therefore 301 duties are right. But on the contrary, WTO court has held to be contrary. Therefore, you see that kind of a situation playing out. I see that playing out also on these tariffs.
Okay. Thanks. Is Mr. Otuke still in the presentation, or he has also? So don't find him over here.
Yeah.
Yeah, he's
Oh,
here.
yes. Yes,
Yeah.
Mr. Otuke, you were there. See,
Yes.
in Africa, there are many countries which are this in the category of LDCs or something, developing countries or something that's named as, or least
Least
developed
developing
countries,
country.
as we have. I mean, our the neighbor Bangladesh, which is just beside India, that was also till the other day, or perhaps still is, least developed country. Now, is there no separate dispensation for them from the US side? I mean, are they also going to face the brunt of these high tariffs when they sell
Yes.
products?
Yes, they are. I mean, the thing is, in the announcement that was made by the Trump administration for reciprocal tariffs, he announced quite a large spread of tariffs for different African countries. The least was for the DRC, which is the Democratic Republic of the Congo, which is 11%, and the highest was for Lesotho, which is 50%. So yes, there are. There is obviously the trade, direct trade with America or with the US from Africa is a bit disjointed. It's not for some countries there is a lot of trade, and for some countries, the couple of countries, South Africa and probably Nigeria, I think, have a trade surplus with the US, which are primarily driven by oil and gas for Nigeria, and then for South Africa for oil, solid minerals and things like that. So these are the only countries that have the trade surpluses. For other countries, the varying levels of the difference in the trade between two countries. But the thing is, like in every other situation, things like this should present an opportunity for African countries to kind of take advantage. And one of that, I was trying to say before, is that the African Continental Free Trade Area, which is a flagship project of the African Union, Agenda 2063, was launched in 2021, and it aims to create a single continental market for goods and services, allowing the free movement of business persons and investments, and laying the foundation for a continental customs union. Now, having that in place would help, because it would kind of stabilize the trading laws and trading agreements between the African countries, which makes it more attractive for investment from different countries. And also, if we take into control, looking at other things that could, other ways that African countries could take advantage of this, there could be a target of mid-tier manufacturers looking to exit Asia by offering sector-specific special economic zones, which is what was earlier stated, or what Prakash was trying to get to earlier on, when he was referencing China moving manufacturing to Africa. So that's one of the things that could happen. There could be that, and different African countries could then present themselves. However, there are drawbacks to it, because Africa as a whole at the moment is not where it ought to be in terms of infrastructural development. So that needs to then be brought to a reasonable level for that, for us for Africa to be able to take advantage of these opportunities that will be presented. Yeah.
Thank you. And one question I was having, which anybody could answer that. Currently, the U.S. Dignitary J.D. Vance, he is there on a visit to India, and there they have told about non-tariff barriers should also be taken care of. So, if for the sake of our understanding, some examples could be given of non-tariff barriers.
These are in the form of
Yeah.
licenses. For example, the WTO agreement on technical barriers to trade, a TBT agreement we call it. In terms of that, we have these standards known as BIS standards or quality control orders, which are getting issued by the Indian government. Sometimes I have found that some of my US clients have sort of come up with this thing that there's a delay in verifications, officer going there, verifying the factory audits. So in simplification could be in terms of mutual recognitions. If let's say US goods are there, which have fulfill a much higher standard, India can sort of recognize that as a mutual agreement, and therefore that could ease the business aspects and the regulatory aspects which US wants India to do actually.
Okay. Okay. So, with this, I think we have come to the end of the session, and any questions from the participants would be most welcome. If we could answer.
Just ask one question here. Whether this turbulence is an opportunity or really it is a turbulence? Country by country here. It is an opportunity or it is a turbulence?
Sir, my take would be that for India, given the position which India is currently, and given the kind of negotiations which are happening, I think it's an opportunity for India. It is a I would say the global order of trade is certainly changing. It is changing very fast. But certainly, according to me, India is sitting in a sweet spot because EU is looking at India. The whole set of cabinet, the EU cabinet was here. You have never seen 20 commissioners traveling to India, including the president. We see US officials traveling to India. So everybody is looking at India. Therefore, I think, according to me, India is on a sweet spot, and it is an opportunity for Indian exporters to grow their businesses.
What about ONIM? Opportunity or threat or turbulence?
No, I believe it's an opportunity. I've always had that belief, because the thing is, there isn't a balance. There's no world trade balance at the moment anyway. It's skewed unequally in the advantage of the Western countries, of the EU and the US. So this, like you rightly mentioned, Devinda, it's there is there's a reset of the world trade now anyway, and there's an opportunity for other countries to take advantage. This was what happened when NAFTA came on in 1994. And China took massive advantage of it to develop its economy. So I personally think that this gives an opportunity for other countries to step up to the plate and gain the same sort of advantage. And yes, so India, Nigeria, everyone else, let's jump into it. Obviously, there are the challenges to it, anyways. But it gives, for me anyway, it's an opportunity.
Now, sort of the title of our program should have been from US tariff and opportunity, not the US tariff and turbulence here.
No, actually, what I was noting was that from today's newspaper, I saw so many items where there is a great deal of apprehension in the US that the economy is going to take a severe beating. There will be supplies drying up, prices rising, etc. So, with all these possibilities, recently Mr. Trump had meeting with the CEOs of Walmart and all these companies. With this sort of situation and danger seeming to loom large, whether at all this tariff thing will proceed in the way it has been presented, or it is just a matter of sort of a threatening posture and then gradually withdrawing. So that question also perhaps is there, but anyway, that is only for the time to tell. We have already run past the timing, so
Kindly keep this question for the next webinar here.
yes,
And
yes,
please allow our Ruchis Sinha ji to extend the vote of thanks to
vote
all
of
the
thanks.
speakers.
Yes, yes, sure.
Yeah, thank you, sir. I'm really honored to be here today to offer a vote of thanks on behalf of CTC India, the Delhi chapter. I would like to express our heartfelt gratitude to Mr. V. Lakshmi Kumaran, Mr. Gautam Khattar, Mr. Otuke, Mr. Devender Bagia, and Mr. Andrew. Your expertise has truly enriched our understanding of the topic in the manner which you have articulated the topic, that is in a very lucid manner, and have indeed provided an in-depth knowledge of the topic. Besides being considering the topic from the professional side, we have also learned today that changes in the tariff shall in fact our affect our everyday life. As the time shall move on, we are curious to watch the takes of other countries and especially of the WTO in regard to the imposition of such tariffs. We are hopeful that the goal of the trade flowing as smoothly, as freely as possible, ultimately improving the welfare of people worldwide, shall be achieved. Coming to the attendees of the topic are concerned, we are deeply grateful for your support and encouragement. Your presence and involvement has been invaluable. This event today is one of the unique event and perhaps the first event discussing the topic with such in-depth uh, in-depthness globally. Looking forward to more such events, sir. And once again, thanking you. Good night from Ruchesh and the entire CTC team. Thank you, sir.
Thank
Thank you,
you.
Honorable. Thank you,
Thank you,
Thank you,
Devendra
Professor.
sir.
everybody.
Thank you.
Thank you. Thank you, everyone. Thank you.
Yeah.
Yeah. Thank you, Gautam ji. Thank you, Smita
Thank
ji.
you. Thank you,
Thank
Ji.
you. Thank you.
Thanks a lot. Yeah.
Thank you.
Thank you. Thank you.